Well, g'day there, traders and friends, market participants, and enthusiasts right around the world. You are here with James again on behalf of Pivot Point Trading as I bring your attention to the chart of the US dollar index. Today we have seen the US dollar potentially put in a very important bottom type of candlestick reversal pattern. It is showing up in a very important location. It is at this macro support level, lingering just above that 99 round number. What we have seen is a very strong bullish candlestick, which we have been expecting once we see price pull back into this green box. As at the close on Tuesday, this could be the beginning of a larger upward move for the US dollar. So again, a lot of people are, I guess the sentiments of the US dollar over the past 2 months, if not 3 months, have been relatively bearish. However, it does look as though, again, we are starting to change the current dynamic of selling, and we are again rebalancing towards higher prices, or at least greater appreciation in the purchasing power for the US dollar against the basket of currencies which it trades against. Let me just continue with the discussion. What we have seen more or less between Monday and Tuesday's trading session for the US dollar is that of a one white soldier candlestick. It is almost what we call an engulfing candlestick too. I mean, these are two of the strongest two-day reversal signals that we have in the world of candlestick charting. What is also very important is that when we look at some of these oscillating indicators, given of course the long-term consolidation which we have seen in the price of the US dollar since about mid-November, it does make a lot of sense and logic to see this, or at least see the price continue to the upside. We have been relatively oversold for quite some time. We are seeing the candlesticks at this macro pivot point, this macro turning point. If I go out to the weekly chart, let me just show you this so you can see this firsthand. We have established this on a number of occasions in terms of resistance as we have moved through this channel consolidation throughout 2015 and towards the end of 2016, where we initially broke out of this long-term range-bound sort of market which we have been stuck in. However, what we have done is that we have more or less back-tested this pivot point on 3 occasions. We had one touch here towards the end of 2016, very close after the breakout. We had a similar touch if I go back into the daily chart. Late January, early February bounce. We established a lower high, which was a little bit concerning. However, here we are at the current juncture towards the end of March, and we're starting to see the inklings of potentially that next bullish push to the upside. We are above the 200 simple moving average. The macro trend of the US dollar is still strong. What makes this even more encouraging at this particular point is that we are obviously interacting and finding purchasing power, at least finding buying pressure right around this rising trend line. You can see the extension off from, again, about mid-2016, where we began to propel away from this very important trend line. This is what we call an accelerated fan line. We have obviously broken that. However, we've come back down into the primary trend line, and as at the construction of this week's weekly candlestick, although it is only as at the close on Tuesday, you can see that we're establishing that long lower wick. Now, again, if you go back in history and look at other times where we have established long lower wicks, right on this very similar trend line, or on this very same trend line, you can see what happens next. We get eventually buying pressure. Now, again, a lot of people are relatively bearish on the US dollar. However, when we start zooming out to the monthly charts, if I can do this for you, you can see that since 1985, we have been in a very constructive, predictable price pattern. It is what we call a downward sloping channel. Now, obviously, what we have done is that we have based ourselves, we have consolidated again throughout the years of 2015, 2016. This has come after the parabolic rise in 2014. This is all constructive price action. What makes this even nicer is that since breaking out, we are still holding above this macro support area. Again, coupled with the fact that we are relatively oversold, the exponentials are moving sideways, yet we still remain in a bullish, healthy trend given that price is above the 200 simple moving average. You can see how naturally these are going to adjust backwards, or at least turn back up and move probably most likely back into an overbought reading. That overbought reading most likely is going to coincide with this swing high over here at 102 being taken out. And then eventually the swing high up in here, just above 103, to be taken out at a later date. We do have a bullish entry up here at 104. This is going to signify the long-term trend continuation of the US dollar. However, there is the potential to actually scoop, or at least to bring down this bullish trigger up here at 101.47, and even align it more so above this little swing high range, just over here below 101. So I mean, this is potentially the beginning of a major move to the upside, the beginning of the continuation of this long-term macro trend in the US dollar, which I think is going to take a lot of people off guard, given of course some of the statistics which are being spoken about out there in the mainstream media. What we have seen again is pretty much the unwinding of this dollar dollar trade since the Trump presidency. If we go to the year to date candle, again, this is a really good snapshot. We are down $2 or $2.68, so to speak. However, we are largely unchanged. And again, this is just confirming this sideways consolidation, which is a natural sort of, constructive outlook for, again, some form of a long-term basing pattern, which is going to provide, again, that long-term sustainable upward advance that we're looking for in the US dollar. We have, of course, touched on the fact that we are relatively overbought. If we go to, oversold. If we go to the weekly charts as well, we are pushing back down into that oversold territory. If we continue with the analysis, the ADX has turned up on this bearish move. However, it has plateaued once we have pulled back into this long-term primary trend. And you can see, of course, the CCI, which is still negatively printing at 122, is starting to bounce and realign, of course, with this 2-day reversal candlestick, which has just pronounced itself as at the close on Thursday. If we continue with the analysis, you can see that we're pulling away from that lower Bollinger Band as well. When we pull away from the lower Bollinger Band and the top band begins to move sideways, if not turn down, but the lower Bollinger Band continues to move in this direction only for a couple more trading sessions, often it signifies, again, some form of a reversal taking place. So what you should pay attention to at this particular point is first of all, really what we can sort of conduce from all of this is, well, we have to remain constructive and bullish on the US dollar unless, of course, we break these two macro areas of support. One being this long-term primary trend line on the weekly chart, which is still holding up, and the second being this green rectangular box on my screen. It is here for a reason. We are recognizing this as macro support and, of course, pivot points, which will often lead to some form of a reversal once we see the selling pressure finished. And then, of course, the dynamic of demand flowing back into the US dollar. So as long as the US dollar establishes or at least holds itself above that 99 handle, give or take, we should see, again, a constructive resolution upwards or in the upwards direction to the purchasing power and the appreciation of the US dollar against that basket of currencies which it trades against. It would be a little bit foolish right now to be positioning yourself on the short side of the US dollar. Although it may happen, sure, that is a possibility. I wouldn't be looking to add to shorts or at least open up short exposure until, of course, we start breaking down below some very important macro support area, which at this current juncture just still hasn't actually cracked. We are still at the precipice. We are more or less on a knife's edge, so to speak. But again, I expect it's going to be a whipsaw, much like a lot of individual trades right now, which have potentially triggered for a lot of people to the downside, which again are reversing as we see these equity markets move to the upside again, something we were speaking about for a number of weeks and anticipating. So again, I just wanted to make that very clear on the US dollar. We have remained bullish on the US dollar for a number of months now, even though we have acknowledged the simple fact that we are moving into a sideways consolidation. This may be the turning point for the US dollar, which is the beginning of the large advancement which we have been waiting for. If you cast your mind back to market analysis videos, on this particular date right here, you can go back and look it up. I produced a video to signify the importance of this particular candlestick just here. And really it is very similar. It is what we were calling for, that whipsaw reversal, where a lot of people, again, they look at this type of picture over here and all they can see is bearish, bearish, bearish. The US dollar is falling apart, so to speak. Everything is quite negative about the US dollar. However, in context of the chart itself, we are at macro support, and we were at macro support of that 2-year basing pattern. Well, fast forward from this particular candlestick, which we were, again, looking for, you can see what has happened. We've seen the continuation of, or at least the very strong reversal off from that support level. We have held, we have been setting and establishing higher highs and higher lows, which again is the textbook definition of a bullish trend. But again, unfortunately, a lot of people looking at this this chart pattern over here and calling for it to be some form of a terminal reversal. Simply, I do not see it. Not at this current time, not until we start printing back up around 112 or 112 in the US dollar indice. That is still about 12, if not 13% away from current prices, which is a long way for the US dollar to appreciate. All right, so to put that in context, that is quite a distance to move. And if I zoom in on the chart, or at least bring this into context for you, you can see I'm still clicking my button, clicking my button, clicking my button. You can see up here this red line, that is that monthly extension on that long-term macro downward sloping channel. You can see up here that more or less this is where my own personal targets are going to be on the US dollar. So there is a lot of opportunity in terms of risk and reward if you want to start nibbling on some of these longer macro trades, which I see eventually rolling through the system, or at least being priced into the US dollar for whatever reason that is fundamentally as well. So I just wanted to give you that snapshot like I have done in the past during very important sort of pivot points or turning points for a stock or a market, or in this instance, the US dollar. The reason why is because, again, this could be the beginning of a major move to the upside, which a lot of people simply don't see that they don't see sort of unfolding. And again, I want to bring it to your attention because there's a very high likelihood that this is it right here, right now, and it's going to keep, or at least sweep a lot of people, take a lot of people off guard, right? And I don't want you to be one of those people. So On that note, everybody, enjoy the rest of your Tuesday evening, if not Wednesday, if you are viewing this on Wednesday. And happy trading moving forward. All the best, everyone. Goodbye.